things are moving faster than they ever have in human history, and this is the slowest that will move. And that will fry your noodle a little bit. He's the deal doctor. He's seen every mistake. We've been to Failure University.
Welcome to the podcast. Today we have two special guests with us. We have Darren Laureano, the co-founder and CEO of Southern California Equity, and his brother Stu Laureano, who is the Director of Investor Relations. They are a private equity firm in Southern California and are currently seeking a funding round of $500 million. Let's start off, Darren. Why don't you share a bit about your role and how it fits into the bigger picture at Southern California Equity?
Sure. Yeah, Southern California Equities, an expansion. It's what we call an institutional spin-out model from our original founding brand, Southern California Land Use. The original brand actually was a capital deployment firm that was kind of pioneered an entirely new idea in commercial real estate in particular, where we were specialists at what I call the seven, essential disciplines of real estate investing. It's acquisition, disposition, how you acquire, deal sourcing, architecture, development, regulation, construction management, leasing, and asset management after you're done, and then ultimately disposition. I didn't originally mean to start that way, but what ended up emerging was because I focused on an idea when I originally started the brand, I focused on an idea that it really didn't matter what we built if we didn't have an occupant and if we didn't manage the occupancy and the tenant leasing well. And I found that people were not good at this. The brokers were good in their wheelhouse, but they weren't good at understanding the practicalities of how to get them in there. The contractors were good at building, but they had no idea how to target a date and hit it. The private equity firms didn't know what was happening with either the architects or the contract. Nobody knew. So I just sort of emerged the brand focusing on occupancy and tenant relations to get them in. The faster we could get them in, the higher velocity of the transaction, the more trust in the transaction, the more our brand grew. Anyways, it grew long enough, and then we did an institutional spin out into Southern California Equity. So, as CEO for Southern California Equity, I oversee everything. Everything lands on me, but mostly I have to admit I do mostly teaching and training within the group. We have a really wonderful team. Most of them have, 20 to 30 years of experience. I've known many of them my whole life, like Stu here. I've trained almost all of them personally. Uh, and I think it really has a lot of value. You have to have a good team. But I spend Southern California Equity as an organization is split up into five different teams. And each of them has a different leader of the team. Stewart's part of the investment team. The CIO is leader of the investment team. There's a development team, an operations team, a compliance team. And then I'm actually involved in all five teams. I think that's the best way to explain it.
Yeah, I like that explanation. So it's not just about raising the private equity. You're really involving yourself in so many more steps and making sure that, from start to finish, those projects that you're seeking out and funding, that they get completed, that they are successful as well.
Yeah, well, it's a really good question, kind of a good point, is only by focusing on that occupancy can you work your way backwards, reverse engineering all the complicated moves you need to make to have good investment decisions at acquisition. So what I ended up becoming was a deal sourcing expert. And I was the very best, well, still am, I think, the very best at sourcing deals and knowing very quickly what is going to work and what is um, just frankly something that's not real. We like conflict when we see our project. We're very good at finding asset conflict. Asset conflict usually scares everybody in commercial real estate. We actually like it because we're very, very good at solving it. We use it as leverage in the transaction. So I think a lot of people misunderstand that conflict isn't a bad thing. You just have to have enough experience to know what to do with it. And I think that most people don't. And kind of like we talked about before, I think being an expert in having in-house expertise in all disciplines is what makes that very easy for us to see. So, ultimately, the answer to your question is operational maturity within a private equity firm is what is critical, okay? Especially if you're getting your first fund off the ground. You have to have an institutional level ability to manage all the complicated processes, to track and record everything that's happening, and ultimately hit the target, like you just kind of mentioned, which was how do you get this thing actually done and make sure that you're handling it. I can tell you where this goes a little bit sideways is most people rely on outside sources of information. And those outside sources, they will not tell you this, but most of them are just guessing. Um, and it's very hard, unless you've been at this a very long time, to figure out who's guessing and who's real.
Yeah, that's a really good way to put it. Sounds like you would be very good at chess.
Uh, I'm good at like 4D chess, but 2D chess is probably not my wheelhouse.
No.
But yes, 4D chess, you do have to play that pretty well, actually, in private equity and commercial real estate in general. I think within private equity, commercial real estate's, it's a complicated animal, and you do have to, you have to enjoy it. I think, and I think our team does. I think that's one of the fun things we do is, um, we have a good time at joking around about this, and I think that comes from confidence because you're relaxed about it. You're not tense because you have confidence.
Yeah, it makes sense.
One thing I'd like to share there too is a distinction between Southern California Equity and the typical um, fund sponsor. That role is our view of the entire life cycle of the investment, from acquisition to occupancy to disposition. It's really unique, and why that's important is the typical private equity we call the common GP really. Looks at primarily the financial engineering. And beyond the financial engineering, there's chances for conflict and all those challenges that Darren referred to that he has the expertise in. Those are stumbling blocks throughout the deal. And now that we're into the era as far as financing of rates that are going to be higher for longer, the property skills that we bring to the table, that our operations teams bring to the table, are really a separator, a huge separator in success for ultimately for our investors and the tenants that get to enjoy the kinds of space that we create.
You're making me excited. I don't have, your minimum investment to be part of this, but I want to so badly.
Well, you're a connector, man. That's we want to help people in all shapes and sizes.
Yeah.
I think that's another thing that kind of for us when you're doing fundraising and capital raising, for us this goes beyond the numbers, or at least for me it goes beyond the numbers. I enjoy this so much. I like to reach out and connect with the individual investor teams, not just necessarily the principal person who has the capital, but the teams and the younger people that are in there. There's a lot to learn along the way. And our fund is based on having investor mini clinics and tours that are, conducted by me, that I'm there. This really goes to us, it goes beyond the numbers. We want to make sure that our investment teams get as much as they possibly can out of their relationship with us and what we can do for them beyond the numbers, beyond their investment. So it takes them to be, they can take it into their other real estate investments and be even better at sourcing those for themselves. So that's kind of how we see the fund, working out.
Yeah, that's awesome. So, what major shifts are you seeing in your industry right now?
What major shifts are we seeing? I could probably tackle this one, but Stu's probably a little bit more. Some recent headlines this week, I think, kind of shaped that a little bit more for us. But I'll let Stuart take that one.
Yeah, the industry is shifting tremendously, and I will tell you for your audience, if you're looking for a 10,000 foot view, we've got a resource that we just published called The Great Reset, and you can find it on our LinkedIn platform. And it really goes through the shift that we're experiencing right now. And to be honest with you, it's generational. What's going on can kind of be tracked through history, the way this current market cycle is shaping up, um, and what that means from a few different perspectives. The changes in how people view commercial real estate, how tenants, how occupiers view commercial real estate has fundamentally changed, which means the locations that people want to be, the types of space that they want to be in, and also, um, where and how do those get created? And that's the biggest shift. In addition to, what you'll see in the Great Reset piece is the financial times that we're in. It's been for commercial real estate, the last few years have been some of the more challenging in any cycle. And there are two other cycles you can look at. The savings and loan crisis back in the early 90s, which radically changed the way real estate is done from a financing perspective and beyond. The great financial crisis in 2008 changed financing and underwriting tremendously. And now, post-pandemic, not only have behaviors changed, but the way the industry has changes from several different reasons. And we're right in the middle of all that stuff. One of the big takeaways that we bring to the table is a shift in where people want to be. So our key target markets are really where occupiers are moving, where wealth is moving. Markets like low tax markets like Miami, like Austin, like Nashville, Tennessee. Um, and then how people use the space is different. People don't want the large high-rise type of floor plates anymore. They want smaller floor plates that are way more creative, way more open, and lead to culture. If you're going to bring somebody into the office now with return to office mandates, you got to create a need and a want and a desire for them to be there and collaborate. And then there's what we call a market bifurcation. There's winners and losers. There's high quality, what we call Class A, low rise creative space that we create in high demand, a property type that is in major demand. And then compare that to Class B and C spaces that are outdated and probably have no future use whatsoever other than demolition and taking that space and off the market. And our sweet spot is finding those gems in all that turmoil and executing what we call our deep reposition method, turning um, outdated, underperforming assets into high performing, very desirable, in demand specialty uses. So, yeah, there's a lot going on, and we're coming into this new cycle, which has always proven to be a vintage that really is generational for its return capabilities. And so we're fired up. We're excited.
Yeah, I like how you put that because it definitely is generational. I mean, why should I go into the office if I have my cute kids that you just saw interrupt me, they brighten my life, but they gotta, provide some sort of incentive if they want me back in the office, right?
Yep.
It's gonna brighten my life as well.
Yep.
You can't plan that. It's a 3-year-old, What are you gonna do about her?
Yeah. Been there, done that.
Yeah. I actually have four. We started with 4 or 5 and under, so we know exactly what it's like.
It's a lot of fun. It's a challenge to keep up with them sometimes for sure.
It is, absolutely. To be honest with you, it's actually a lot like building some of our buildings in our building our company. You start with a good foundation, and that's what you have to do as a family. You just got to have a good foundation. Everything starts with that, and it becomes easier from there.
Yeah, I love it. So with this shift in the generational patterns and the needs and desires of commercial real estate, how is that impacting your own business or growth strategy?
Um, how is it impacting it? Well, it's impacting it big. I mean, our target markets, like Stu's laid out, is Austin, Nashville, and Miami. LA we do just because it's home court advantage, not because its economic, indicators are so great. We just happen to know everybody here. Um, but I think that's the primary thing that has affected, our strategy and our growth. The other thing too is technology centric strategy that we have. So our fund focuses on tech centric media entertainment production, sound stages, digital media content creators, podcast, studios. and medical biotech. Medical biotech, all of those things are actually very unique. They're not anything that you would ever call a traditional office space by any stretch. So it stays out of what is traditional office, stays into something that is actually kind of challenging to do and people and often overlooked and very misunderstood. Medical biotech is a huge specialty that you really have to know what you're doing in commercial real estate. So that sort of really thins the people out who can handle it and tackle it. And there's a lot of trends I saw coming when I developed the fund and when I spun out the new model and the private equity model. I followed a lot of the trends. I knew what was happening. I knew the shifts that were happening, particularly demographically. I saw very, very early on, we had a lot of indicators from our own tenant work here that we did um, within our original brand, Southern California Land Use. The shift was already on to Austin for entertainment. The shift was already on to Nashville for entertainment. And there's always been entertainment in Miami, but the shift really pushed hard. So we saw that right away. Medical biotech is something I've always done here in Los Angeles, and I think that that is part of our strategy for innovation-led cities. So that sort of led a little bit further to how we targeted things, which was university research medical facilities. So you had to have, so here in LA, we have, extensive university-led research facilities in medical and biotech. UCLA, obviously premier, USC, University of Southern California, obviously premier. But then when we branched out into the innovation-led cities in the other markets, UT Austin, incredible. Vanderbilt Medical Center in Nashville, incredible. Miami, filled with incredible, medical, including the University of Miami. Um, and the only thing I didn't see coming when I originally started the brand was AI was a thing, and it was obviously a thing that was coming, but I didn't see it being as powerful as it is in medical and biotech, and it's ridiculous. It's just, it's a technology that is affecting everything, but particularly medical biotech. We're going to see that make great leaps and bounds for all of us in healthcare and treatment for a long time to come.
And I love talking about AI on the podcast. So could you
Sure.
go into a little more detail on like how that relates to your company and using AI and the medical and biotech space?
Well, it's just, I'm not a doctor. Obviously, I play one on TV occasionally. But you just know if you just stay up with the trends, you can see that that's the shift there and what it's doing. For us in our own industry, I literally am using it every day. In fact, I have three different AI tools that are open all the time. And I have a whole series of tasks and things that they scour through. They look through our own spreadsheet modeling in-house to make efficiencies in the modeling and how we analyze data coming in. And that's just as private equity guys. I think we're pretty far out there for most people. I don't think most private equity firms are even touching any part of this. Our younger guys, we have some really good analysts who are, quite talented and very bright. And they use it to scour deal sourcing throughout all off-market deals included, and to create new relationships and new brands with the markets that we're in. So we do it a lot to find good deals, and that's really what we're good at, is having a deal pipeline. And I can tell you in private equity, it's really interesting. Most private equity firms don't source their own deals; they outsource that. They're bringing developers are bringing them deals who, frankly, are getting them from brokers, and I can be honest with you, neither one of those guys has any idea what happens with the technical challenges of real estate and where the landmines are. They have a role, they're very good at what they do. I'm just saying you're getting half the answer or half the information when you're talking to those two, and it's really hard to put it together. So the point for us is our deal pipeline is very long and it evolves every day. We have anywhere from, say, 80 to 90 deals in the pipeline at any given time. Those are shifting to about 20 to 25 that we like. Our analysts are constantly crunching numbers and looking at new information and how to sort through those and bump some down and bump some up to the top of the list, depending on how those markets are changing. So hopefully that answers your question. I think we're pretty far out there with the tech that we use as far as private equity goes. It's only going to get better, but we literally see it embedded in every single tool we use.
Yeah, I'll speak to that from an investor relations perspective and, communicating our strategies, our updates, our ideas, the things that we're focusing on and emphasizing on. like any industry, communications is one of the biggest things that AI affects. We're using tools. I like to call it my second brain, our second brain, where there's all these pieces of content that we've created from our track record that goes back to over 200 transactions to some of the strategic documents we got. We just continue to feed that into this second brain. All of our resources go in there, and it helps us to articulate what we're doing more effectively and build trust. And like any business, it really moves at the speed of trust, and it's helping us to grow trust with potential investors, our LP, our database, and we do something that's really unique. It's very special. It looks different. So helping people understand that we're not just some what we like to call paint and carpet guys. And when you say reposition, that means so many different things. And what we do with adaptive reuse and deep repositioning, it's something most people haven't experienced really unless they've worked with us. So helping bridge that gap, AI really helps us create visuals and create communication strategies and resources to educate. And that's, my role more than anything else, investor relations, is to educate, pay attention to trends, and let people know here's where things are going, here's why where we've been will help you get there.
And I
Yeah.
think it's really important too, just for communication standpoint. Like when you're starting out in private equity and you're building your brand or whatever it is that you're doing, and it probably goes, to be honest with you, it's every industry and it's every business. But communication of the idea and the strategy and constantly being there and having somebody dedicated to that so that investor outreach, when they have concerns, when they have a question, when they want to know what's happening, even with the performance of the fund, the governance of the compliance, or any of the part of that, or even like Stu said, the strategy of a particular asset or what we're doing with a particular move and how does adaptive reuse fit into that and why did we pick that certain asset and why do we think that's going to be a success and what we're doing with it. Stuart's the one communicating that message, and I think investors really appreciate having somebody that is resourceful, that is excellent at communication, and can sort through their concerns, if any, and obviously highlight the successes. And I think those both are really important. The only other thing I'd want to say is, Stu mentioned adaptive reuse quite a bit, and I tend to not talk about it because it's like second nature to me. It's just what we do all day long, so I sort of forget to bring it up, and that some people don't know what it is. Um, and I think
I'm
it is,
trying to fix that.
yeah,
But he's coming along. He's not the sharpest tool in the shed, but
So, in our view, deep repositioning and adaptive reuse are basically, twins. They're connected at the hip. They're right there. So, our deep repositioning, so adaptive reuse is taking something that you see having some value that has been overlooked or mistreated or is in distress or in some way is dysfunctional
underperforming.
from underperforming, dysfunctional from a previous industry, where manufacturing is a good example of a lot of things we're always looking for. Manufacturing in LA is gone. Manufacturing in Miami pretty much gone. But digital manufacturing is alive and well. So we repurpose those buildings for a digital media content creator who's an entirely different type of manufacturing, but manufacturing nonetheless. So I think that's a really important way to do it. And then the deep reposition is massively invasive. We'd reinvent them basically from the bones of the building all the way up. We implement all new internal utilities into them for high efficiency. It's a climate positive technique that we've used, and it's a sustainable technique. I'd like to tell you, it was purely those reasons, but the truth is that our adaptive reuse is faster. It is a faster process than ground up. It moves much, much quicker. The turnaround is much, much faster. The velocity of the transaction is a lot quicker because you know what you're already going to do with the existing bones. You just have to rip it down, redo it, put it in there with good people, know what you're doing. It ends up becoming more like surgery than construction, but you can still do it much quicker. And what that means in the return profile, obviously, is faster completion, faster velocity, faster tenants, faster cash flow. Ultimately, the fund performs better in the long run. So, yeah, sustainable is great, and we're very climate, conscious here, but climate positive real estate is one of our main wheelhouses, and our ability to turn it around quickly is even better.
Yeah, that totally makes sense. Shifting back a little bit, I know you said you have a lot of processes that are using AI. What's working well for you and what's been frustrating about that process? Myself, I was very resistant to using AI for the longest time, but now that I do, I can't imagine not using it, you know?
It's so funny. I'm really reluctant to say this, but I figure everybody will eventually, figure it out at some point. So, I've got to the point where I have AI writing the prompts and the tools for other AI to do things. That's
Yeah.
I mean, I don't think that's, a giant leap, but it did take me a while to get there. But yes, when you need it to do something, you can instruct AI to give itself its own instructions on how to do what you wanted it to do, and then ultimately be more accurate to have a better outcome and to move faster within it. So, I would say that's not really a struggle, but it's a unique thing that I haven't heard many people bring up to me. And I can tell you it's worked really well.
Yeah. I just met another business owner that has it's Snippets AI, and they are trying to pioneer, saving all of your snippets in one place and being able to reuse those. And so instead of, rewriting those and having the AI rewrite the prompts every time, you're saving them for later, and then you're easily able to access them and, paste them right in and get going much quicker than before.
Yeah, I
I'll
mean,
say the most foundational thing that sorry to cut you off, but it is speed. And I heard this said this week that um, things are moving faster than they ever have in human history, and this is the slowest that will move. And that will fry your noodle a little bit. That the organizations that are leveraging these tools will advance and ultimately replace those that aren't. And real estate is a stodgy, you know, old school kind of old boys thing. And we are 100% not that. So, the speed, the we don't make a lot of mistakes because Darren's built his business. He mentioned, he's the deal doctor. He's seen every mistake. We've been to failure university, except we've been there through the online course. You know what I mean? We didn't have to experience everything. We know what failure looks like and how to avoid it, but it helps us accelerate through things that definitely slow people down. That's one of the challenges that LPs have looking at real estate is, man, it's a long-term thing. It's illiquid. Um, Not for us, not in our world.
yeah, and I think Stuart brings up a good point that, is kind of part of our origin story of why we decided to spin out into a new model and expand. Um, I realized that I would say, well, what's the best way to put that? So probably about 30% of our business originally came from deal sourcing, where we were targeting, we were selecting, we were picking, and we were designing the investment strategy from point A to point B, right? Great, wonderful. Worked really good. The about another 30% of our business came from people who were already upside down. That's what Stuart was just talking about. Where I was called in is to see where the patient was already dying on the table and they needed somebody to jump in there and do surgery on it. And one of the ways that I had originally started doing that, and you're called in from the outside to evaluate. Honestly, I was being called in from LP advisory boards. I was being called from different general partners of different funds. I was being called from fund managers. I was being called from independent investors. I was being called for one-off deals where the whole process had already gone bad. So figuring out how to being really good at figuring out how to do that in a way that isn't offending everybody who's already in the deal and being able to unwind some of the mistakes and ultimately get the patient back to good health. Uh, it was an undervalued skill at the time, but one that I realized quickly was going to shape Southern California equity going forward. You really had to be good at that. And I think that, we became known for the person who could do it.
Yeah, I found in my own life that I don't always end up where I want to be, but somehow, the stuff that I learned at that last place that I thought was, like just tearing my life apart, that it actually helps me in the long run and um, really advances me in the future. So
Yeah,
I
and
love how you
even
put
for us,
that.
yeah, totally, I get that. And even for us, it took a real multidisciplinary skill because real estate is, it goes, did the problem happen in the transaction? Did somebody overlook something in the original due diligence and deal sourcing? Did it happen through some, life safety part of architecture? Is it some misunderstanding in the field where the construction or the developer? Did it happen, with the tenant negotiations and which by the way, which is really important in commercial real estate for anybody's out there, anybody young, anybody looking to get into it. Because, commercial real estate's I find it way less complicated than multifamily. People say multifamily, multifamily. I'm like, oh my gosh, no, thank you. You have all the problems of commercial real estate, and then you have a whole other relationship issue going on with people who live in the property. It's crazy. So we'll do that on another podcast. But the transaction, when you're dealing with that, most of the time you're actually talking to the either the tenant negotiating team attorneys or the acquisition attorneys. Okay. And if you can speak to them very
And the
accurately,
lenders.
what's that?
And the lenders.
Oh, yes. And the lenders. Yes. That's
Big part of the equation.
that is really who you're talking to. And if you can accurately and very predictably and with a great deal of confidence answer their questions in a direct way without having to talk in circles, without having to search for information, without having to go check with three other resources, you really instill what I call transactional confidence. And that transactional confidence speeds up the deal and ultimately, closes deals a lot faster than other things. And that happens on the tenant side, and that happens on the acquisition side, and that even happens on the disposition side because if you don't know what you're selling, it's very hard to go instill confidence in the buyer.
Yeah, makes sense. So at Equity, what things are you most focused on improving?
It's funny. I was just answering a question like this the other day, and it's probably not what you would normally think. Stu had a chance. Maybe I'll let Stu jump in here, but he actually just uniquely was at an investor event in downtown LA where he had actually run into the Dodger parade recently, because they won the World Series and he happened to be there and he was in the middle of it. But I'll let him jump in there. But I think it's, practicing like you play is probably the most important thing. Everything you do within the organization, you have to practice like a champion if you want to be a champion. So I'll let Stu jump in there.
Yeah, it was a crazy day. I showed up to a business meeting and ended up at a parade. But what that was is just a celebration of excellence. And you know, showing up every day like Darren's talking about is a huge thing, but it's a team thing as well. And building teams, I think we're so excited about where our team is right now. When the Dodgers got Shohei, it changed everything. I'm not saying we've got Shohei. We've got all the role players dialed in. Nobody wants to take full credit, and all we're looking for is results. And a championship in private equity is happy LPs, happy limited partners that are excited about rolling in to, your next platform. And we're well on our way to doing that. And it just be from a 10,000 foot, well, it wasn't 10,000, it was a 17 floor perspective looking down. It just happened to be this building was on the parade route. And you look down and you see um, what success in that industry looks like and how it's celebrated and the amount of people that are impacted. That's a big thing about, what we do and how we do it. We're taking underperforming, assets, typically urban infill in places that have been overlooked, and we're reinvigorating neighborhoods, so we're impacting so many different stakeholders. Yes, our investor partners, um, and yes, residents and businesses that come into the spaces we create to change the world. We like to say we house the innovation economy. The kind of environments that we create is where AI, brains want to live. And they're creating, the future of so many different things. So, yeah, a championship involves the right team, the right ownership, an energized, base of support. And yeah, it was in full display on Monday when I was downtown. So those are the things that are excited and kind of the direction we're looking at and how we see ourselves impact. I like to think of us as impact investors. We're not just financial engineers. We're impacting people and teams and communities really with deep reposition especially.
Yeah.
Yeah, I think the other thing too is, and this may be where I am a little bit slow, but when because I never really looked backwards, especially with my original brand and what we were doing. I didn't look at what I did. I looked at where I was going. Um, and when I turned around and actually did look at some of it, some of the tech companies and the housing and innovation economy that we had done were they were the who's who of the Fortune 500. It was, we've done Google, we've done Microsoft, we've done assets for Apple, we've done BuzzFeed, we've done, gosh, I can't even, I haven't, who's who of Hollywood entertainers. I don't even know if I could throw them all out there, but we've
Beats,
done
Snap, you know.
Snap, Illumination, which is obviously part of the Minion, fame. We've done Bad Robot, which is, done every movie you can possibly imagine. We've done every brand that surrounds those brands. We've done all of them. I'm going to leave out a bunch of them. I'm very proud of them, and I'm very proud that we worked on them. I forget to mention it, and I forget that sometimes it matters to people. Like I'm so used to it that I don't think that. And then I probably the other thing I would probably say to that, and again, if there's any younger people out there, for commercial real estate and all those wonderful things, and they want to hear this stuff, while all those things are great, and all our Instagram is really flashy, and if anybody wants to go to southerncaliforniaequity.com, there's links out to our LinkedIn and our Instagram page on there, and you can reach out to us and ask us questions. We're happy to answer them. But when you look at all those things and you hear all those brands, the 10% of the cool stuff that we talk about is hiding behind 90% of the crud that nobody wanted to do, right? I didn't just walk into the deal at Google. I didn't just walk into the deal for, Beats. That took a lot of trust, a lot of relationship building on things that people wouldn't want to do. And I think I really became known for somebody you could call and rely on, even if I wasn't part of your deal.
The telltale mark of a true business owner, right? Doing the hard work that a lot of the other people just don't want to
I think that's what it really comes down to. And I think it's a good message for some of the young people out there. Add value to people, and it ultimately will circle back and attack you later. You never know when, but you know what? You just gotta, if you can help them, do your best to help.
do. Yeah. Well, we're about to the point where we need to wrap up soon, but I'd be remiss if I didn't ask my favorite question.
Sure.
So I know from Stu, our conversation last time that you guys are seeking a funding round of, 500 million. You like to look for several different assets that you can diversify that portfolio with. So if you had a magic wand and you could wave it to fix one thing that's slowing you down or holding you back from reaching that goal, what would that be?
Hey, that's my line.
Yeah,
The magic wand line,
I love
man.
it.
Yeah,
Great minds think alike.
absolutely. I have a crystal ball, and I can see the future, which is great. Obviously, how we shaped our strategy is most of that. But a magic wand, if I had a magic wand, what would I what would I change or what would I do? You know, I got to be honest, I mean, I guess do what the fund one thing just to get through that a little faster, I suppose, maybe.
Yeah, to find an ideal partner, somebody that sees where we're going and wants to, be involved strategically, some strategic capital that goes, you know what, you guys know exactly where you're going, you know why you're going there, you know that this is the perfect time to be there. Uh, we see you, and that
Yeah.
person's out there. And our crystal ball, unfortunately, only sees market opportunities. It doesn't really look into the conference rooms and investment committees that are, so yeah, X-ray vision
Ah, there you
into
go.
the
Yeah.
investment committee that is looking for a strategy that looks different. I'll just say that, sometimes Steve Jobs is known for one thing. He said something a long time ago is people don't know what they want until they know what they can have. And, we're I don't want to pat us on the back too hard, but we're the Steve Jobs of this deal. And we want to have somebody that's got some vision that says, you know what? That'll work.
Yeah. I think that's probably right. But I wouldn't trade the struggle. I never would. I find that you learn most in your struggle, so I would never use the magic wand to take the struggle away. But yeah, I would probably use the magic wand to teleport myself into a couple of conference rooms. It might be helpful.
Yeah. Well,
And
Stu,
bring the crystal ball with us.
and that's a bold move comparing yourselves to Steve Jobs. So that just exudes, that confidence that you guys have in what you're doing.
Yeah,
Yeah.
we know,
So,
who we are and where we're going, that's for sure.
yeah, absolutely. So for any of our listeners, whether they be, LPs, GPs, any of the other acronyms that we threw out during the podcast that they want to reach out to you, what would be the best way for them to contact you?
Easiest way is southerncaliforniaequity.com. And on there, we have our social links, including LinkedIn and our emails. So you could reach out to Stu, Director of Investor Relations, or even myself. Happy to answer any questions. We do the best we can. We get a lot of traffic in there, but we're still happy to, sort through the best we can and reply back. We reply back to everything.
It's awesome. Well, it's been a real pleasure meeting with both of you and doing this podcast with you sharing your insights. And for any of our listeners, don't forget to like and subscribe. Thanks.
Yep. Thanks for having us.